Welcome to Bazaar Morning Call. I'm Sonia Shenoy, and with me, yes, is the lady who elicited that response from Rajan yesterday. Lata, good morning. Anuj, morning to you as well. The swagger with which the governor spoke yesterday was elicited by you. You called him Santa Claus, and you know what? That was trending on Twitter. Anuj and me were discussing it. It was an internet sensation. I mean, the statement that he made. How did all of that come about?
No, I still think that, despite his protests yesterday, had a lot of little things and big things for everybody. And I want to point out to some of the other things that got missed out. When the big policy itself, the rate cut makes money cheaper for many borrowers. But look at the smaller things. Foreign investors now can invest in government bonds to a larger extent. That FPI rules came in 5% and incrementally, immediately on October 12th, 13,000 crores more they can invest. Now, this makes borrowing cheaper for the government. It also brings bond yields down. And that way, those Indian banks who are holding bonds, their prices rise. So there's a mark-to-market gain. When government bond yields fall, corporate bond yields also fall. The spread falls. So actually, it makes money cheaper. Then Indian companies can now issue rupee-denominated bonds abroad. That again is one way to make money cheaper. Small loan borrowers, that the risk capital for small loans is going to be cut. The exact rules have not been announced. So if you're borrowing below 60 lakhs or 50 lakhs, then you're going to get some, additional 0.25% lower than if you were borrowing a high denomination loan. Primary dealers can participate in currency futures. Now, this is a very big expansion of business for, say, a PNB Gilts or, an ICICI Securities primary dealer or Citibank. There are about some 15-20 primary dealers. It's an additional business for them. They are masters at interest rate. Currency futures is also an interest rate play. To give them that additional line of business is a very sensible thing. It also brings more mature players into the currency futures market and deepens that. And then, the other market in which you buy foreign exchange is the OTC market, the FX market, where we get the rupee rate. Over there, you can now, take much more position without providing documentation. So the amount of speculation increases, depth increases. So there is a lot in this policy, which is why I think the word Santa Claus was merited. But to come to the most important gift that he gave, that 50 basis, we have to look beyond just that 50 basis. He also said it will be an accommodative stance. Yes. And he says 18 months down the line, I see inflation at 4.8%. Yes. Now, let's remember, Rajan has always been conservative in estimating inflation. His initial estimate of Jan 2016 was 7%. Then he brought it down to 6% after he saw that the fiscal deficit is well contained. Then he brought it down when, the Chinese story unraveled. But the point is, even this 4.8, going by Rajan's history, the 4.8 18 months down the line could be an overestimation. Which means, we have come almost to that 4.5% inflation or 4% inflation, which we thought was an unachievable goal when the Urjit Patel committee first put its report out. It's a remarkable achievement that for 5 years, from 2009 onwards, up until 2013, we struggled with double-digit inflation. In a matter of 2 years, we are talking about 4 and 5% inflation as par for the course. That is why the rupee bonds succeed, because the rupee is seen internally extremely stable. So for me, that really is the very big Santa Claus statement that you've almost achieved. Inflation is reined in, and it is coming from someone who won't accept that victory very easily. The subtext of this also is that growth is going to be bad. So that is why I think the sell-off by foreign investors and the long, bleak, growth scenario is something which will not be lost on the markets. If inflation is low, it's also being abetted by a very poor growth picture. So that's the negative from the Santa Claus that came yesterday.
Oh, yes, indeed. And that's why the market reaction was far from euphoric. In fact, the Nifty actually came off about 85 points from the top. And there was selling by FIIs also, more than 1,100 crores or so. So that just goes to show that I think the global cues or the global weakness will once again be top of mind as far as the markets are concerned. To that extent, we did get some, volatility in the global markets. Some of the US markets closed in the red. The Nasdaq was down. The European European markets were under pressure as well. So it seems like this is still a sell-on rally market. That's the sense you get from the closing that we saw yesterday. Anuj, hi, morning. This was a discussion that we were having yesterday as well, and you were saying that, you know, if there is a big FII sell figure, then it would indicate that the top for this market is capped, and it's a bit disappointing for the bulls. And we did get that big sell figure from FIIs.
Morning, Sonia. Yes, I did say that expect a 1,000 crore sell number, and it was 1,100 crore. I was not surprised by that, actually. Let me put it that way. Because, you know, this is a market which has been a sell on rally market. Actually, you know what? Yesterday was, for me, the most disappointing bit about yesterday's trade was that for a 50 basis point rally, for a 50 basis point rate cut, the market rallied 47 points, not even 1 point for 1 basis point. You know, at least the market should have given 50 point rally to say, okay, Rajan has cut by 50 basis point, let's give at least a 50 point rally. You know, I've been saying for long that October would be the most volatile series this market has seen, and the first 2 days clearly have shown that. The start has been so volatile. Yesterday, the market went to 7691, 7921, and ended at 7843. So, you know, it's like, you know, all over the place. To see 76 something, 77 something, 78 something, and 79 something. 4, 100 point kind of decimals you saw in trade yesterday, which was telling you the kind of volatility that existed.
100 point, right?
Yeah, I mean, but what I'm saying is that it also saw 76 something, and it also saw 79 something. So that really was quite interesting. And cash market volume jumped about 40 to 50%. Now, my sense is that, you know, while the FIs sold, we have to understand why this consistent FI sell number. Is this because the long only funds are selling in India? My guess is not.
The ETF money.
My guess is A, ETF money, and B, a lot of, you know, a lot of data has been thrown in the market on how much, you know, selling has been there from Saudi Arabia's, you know, sovereign funds. We all know what's happened to crude prices. We all know that, you know, that's a genuine problem for Arab countries. And we know that a lot of petrodollars were invested in Indian market at the height of QE. So some of that is being taken back. The good point is that the domestic investors are still not throwing in the towel. They're keeping on buying. That's a good thing. For me, yesterday, the biggest eye-popping data was the index options data. 3,600 crores of buying in index options. And in that, what was interesting was that there was 1 lakh call buying and 1 lakh put buying. So this is a market in which equal number of bets were taken. The only point which makes me slightly bullish about today's trade is that the calls were bought at 7,900 and 8,000. That means you have to pay much higher commitment to buy the calls, and puts were bought at 7,700 and 7,000, which is preparing for a bit of a sigma event in case the market has to go down. I am very clear about this trade. The two benchmarks now are 76.91 on the way down, which is yesterday's low, 79.26 on the way up, which was yesterday's high. If the market breaks any of these, maybe a bit of a trend emerges for the market, then the Nifty, the bulls want to defend 7,800 on the Nifty. Make no mistake about that. And at 8,000, clearly there's a bit of a selling which is going on. So this really is the kind of trend that you're likely to see. And for today, I think you should not make a mistake of selling every rally. You know, it would be interesting, so it would be tempting to say that, okay, every rally is a selling opportunity. Today might not be that day. You know, the consensus is that it's a sell-on rally market, and consensus may well be right. But that may happen at a later stage. This 50 basis point rate cut and the accommodative stance may mean that the market may have a bit more run to go in the near term, and then you take it forward from there.
Okay. No, I just want to add a couple of things. You know, to say that the market did not even give 47 points for a 50 basis rate cut, it was also a clear outperformance. I mean, it was coming at a time when global markets, Asian markets, were selling off between 2 and 3%. I think 4% in the case of Nikkei, and followed by European markets, which also sold off. So, I mean, they didn't sell off as violently, but it was ultimately in the red that European markets ended. So, it is the measure of outperformance. If it was a flat day across Asia, then probably you would have seen a 4% rally in India or a 3% rally in India. So, the outperformance was there. And in any case, I think what we were getting from Rajan in terms of rate cuts and the other instruments are longer-term ways to make money. It's not a day's measure in the stock market itself.
Yeah, we did, of course, see the immediate beneficiaries of rate cuts spike up. So whether it's the NBFCs, whether it's stocks like Maruti, etc., all of them had a good ovation yesterday. But I take your point completely that now perhaps it could be global cues that we have to look towards.